Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news that US Treasury bond benchmarks are still pushing sharply higher. But first, US jobless claims fell to 178,000 last week, taking the total number of people on these benefits to just on 1.2 million, and unchanged from the prior week and a record low. So still no evidence yet of any rising American labour market stress. You may recall that this number peaked in 2020 at over 23 million. US existing home sales fell again in September, and apart from the pandemic are now running at a 10-year low. High mortgage interest rates are getting all the blame. Americans may not be buying housing, but they have rediscovered the travel bug. Most large airlines there are reporting record revenues in the September quarter, and they're returning to profitability as consumers continue to prioritise spending on travel. And the Philadelphia Fed factory survey in the Heartland Rust Belt region was weak again in October, but no more so than for September. New orders were weak in this region, but hiring was still difficult. And although firms are not optimistic about the next 6 months, they are still committing increased investment for capital expenditure. Taiwanese export orders fell in September as expected, down 3.1%, but that was not as sharp a fall as analysts had penciled in. But weak demand from mainland China is hurting this data, where these orders were down 19% year on year. Compared with most other regions, they were up more than 15% on the same basis. And Japanese policymakers made fresh threats of intervention after the yen tumbled past a key psychological level of 150 to the US dollar, keeping investors on high alert in case Tokyo steps into markets again to support their fragile currency. Rumours are swirling that the Bank of Japan is in a new round of emergency bond buying there. In Australia, their jobless rate remains steady at 3.5% in September as the number of employed people increased by only 900 and the unemployed increased by 8,800. Their participation rate was unchanged at 66.6%. And global container shipping costs fell another 3% last week. That takes these costs down to below pre-pandemic levels, with the benchmark Shanghai to Los Angeles route now under $2,500 a container. And the US Treasury 10-year yield starts today sharply higher again at 4.22% and up another 11 basis points from this time yesterday. And the price of gold will open today at $1,636 an ounce. This is up $6 from this time yesterday. And oil prices start today up $1.50 at just on $85 a barrel in the US, while international Brent price is just over $91 a barrel. And the Kiwi dollar will open today at 57 US cents and about a half a cent firmer than this time yesterday. Against the Australian dollar, we're little changed at 90.3 Australian cents, and against the euro, we're a quarter cent firmer at 58.2 euro cents. That all means our trade-weighted index starts today at 67.9 and up 40 basis points from this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and that was 90 at 9.